Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so we're going to get into the charts in 1 second, but I do want to mention something very quickly. So tomorrow at 8:30 a.m. U.S. Eastern Time, we are going to have Jerome Powell speak from the Fed. I do believe he's going into a congressional hearing, and what's expected is more of a hawkish tone coming out of Jerome Powell. Now, there's a couple reasons for this, but the big one is since the start of the year, the economy has been probably a bit stronger than what the Fed and what Jerome Powell has wanted and has anticipated. So they're likely going to be a little bit more aggressive in their tone towards really, hiking rates and putting the squeeze on the economy. Okay, so I am expecting not only just a lot of volatility, I am expecting a bit of a bearish bias tomorrow morning. Again, we'll see what happens. We can't really know what the future has in store for us, but we do want to make sure that we're aware of all the pathways. That way, whatever happens, we know what's likely going to come, and we can, be nimble and adapt as needed. Okay, that's why I always end off every video. Be nimble, so you're ready for any sort of environment. Okay, so watch out for tomorrow morning. It's gonna be a lot of volatility. Now, as we go into the charts, you're probably seeing my chart looks a bit differently. I am in the process of cleaning up some charts here and there. So as time goes on, you'll see a lot more charts having a little bit less on them. And also I'm gonna have a lot of these things tagged so you can see what they are, like the daily bullish fair value gap, monthly bearish, etc., etc., etc. Okay, so hopefully it gets a little easier to read, and it's something where you can feel more like you're following what I'm saying and not getting lost in all the lines. Okay, so looking at the dollar, so far it's been pretty bullish. Okay, we are having a nice little pullback here, but so far this price action does lead me to believe that it has a bullish character to it. It does have bullish implications, so we are kind of grinding lower. If we do get some hawkish sentiment coming out of Jerome Powell tomorrow morning, then I would look for this to pull up pretty hard, not crazy hard, but pretty hard, but definitely implying over the rest of this week of a dollar going up, okay, to come and challenge these highs here and then eventually trade its way back into the monthly bearish fair value gap zone. So once we come into this zone, then we're going to start being on alert, looking for any weakness for the dollar to then roll over once more and slowly make its way back towards this ascending trend line, which is a very important trend line on the daily. And then we'll see, will it be able to hold this level, or will it start to actually finally take away the strength of this trend line and break through? Eventually this trend line will break. It is designed to break eventually. This is not designed to stay around long term. So I am looking for this to break the next time we come into it after a significant rise. And a significant rise would be a move back towards the monthly bearish fair value gap zone. Okay, so I am looking forward to this this week, and especially tomorrow, as it should give us direction for the coming week and potentially even next week. Now, let's say he comes out more dovish than expected. This is the least probable path, by the way. So if he comes out more dovish than expected, the dollar will have a nice decisive drop towards the daily bullish fair value gap. It is very likely to hold this level if it comes into it and then start trading over here for a couple of days. Okay, it is very, very likely. Now, if it trades down here and holds, I would still look for a move up prior to moving back down. Now, the move up will be somewhere probably towards 104.3 to potentially all the way back towards 104.1, all the way towards 103.4. My apologies. So 103.4 to 104.1 is my general zone where I can see the dollar rise up to and then fail off again to break under this trend line, if this is the path. Okay, so again, this is the least probable path as of right now. The most probable path is that we do start to get some dollar strength come in to move us back towards the monthly bearish fair value gap. Okay, so either way though, I am seeing the dollar eventually having another breakdown even if we come up to here. So short-term upside is what I'm seeing. and then midterm downside on the dollar. Now I could be wrong, and we'll get the short-term downside first and then have some minor upside, and maybe by the end of the month, middle to the end of the month, something around there. Okay, so we'll keep our eye on the dollar, and we'll keep our eye on what happens tomorrow. Now going into the Dow. So the Dow coming into this bearish fair value gap as expected. So this is another piece of evidence that the Dow may slow down, and if the Dow slows down, that may mean the dollar is going to speed up, going to the upside. So Dow came back up towards this triangle that it broke bearish, trading within this bearish daily fair value gap, and now we're showing signs of a slowdown occurring, where over the next day or so, especially if the dollar strengthens, we may start to roll over a little bit, and at least the most bullish structure we may find is that we hold this level right here at 33,050, but it's more likely that we do break lower, coming down eventually back down towards 32,000, and then even lower towards the 31,800, 31,900, really going after the liquidity under this low pivot. Okay, so we are seeing signs where the Dow may begin to roll over if the dollar gets stronger. We're in that zone where this will happen. Okay, next is the S&P. So what's the S&P up to? Again, very similar. Came into this daily bearish fair value gap. I do have a pathway to where it could get towards this higher one here. We did get a nice little wick through this daily fair value gap, but if we do have continuation up, this is still the level I would watch for failure, and then watch for it to roll over. Now it's potentially happening right now, where we're just going to roll over here, especially if the dollar does strengthen like we might see tomorrow, and then we're gonna just look for another move down back to 39.18, 39.20, and then looking to take out these lows, and then eventually trade our way back down towards 3800. Okay, we should see some bullish sentiment as we come in towards 3800, really coming into this low down here towards this consolidation, grabbing the liquidity near this level. We should find some demand, and then maybe a curl back up, and if we do that, we are potentially making that higher low structure on the macro to create a larger bottoming structure to go up higher. Potentially, we just have to wait and see. Next is NASDAQ. So NASDAQ had a very, very nice little day on Friday, or Thursday, my apologies. And then Friday, we actually wicked into the high fair value gap here, the high bearish fair value gap, and towards the low end of this green zone here. And so far, this looks very, very strong to eventually slow down further and break down further. So we may see the NASDAQ come right on back down to 12,070, and then eventually taking out these lows and ultimately getting down towards this daily bullish fair value gap. This is where I've had it penciled in to get to at 11,600. All the way down to 11,400. This has been the general zone I've been looking for the NASDAQ to get to, and then to ultimately maybe even pierce under this low down here at 11,237. And once we get towards this level here, you want to see it bounce from there pretty hard and try and solidify a little higher low structure above that level, really trying to put a higher low structure from these lows down here. So even though we are pulling back, I still have a bullish bias on the general markets for now. Okay, so next is oil. So taking a look at oil, oil's having continuation to the upside. As you can see, it's breaking my doodle triangle so far. It hasn't really confirmed, but it's in the process. And if we do break up higher, obviously the daily bearish fair value gap right here is what you want to see it get to. So pretty much back towards 82 to 83. And potentially all the way back towards 84.50 to 85. And if you've been following me for any time, you know I'm very, very bullish on oil. I think oil is actually going to shoot up really, really hard over this year. So we may see it come up to this level, maybe pull back from here, but then over time, over the coming months, I do think we're going to eventually see a oil that's beyond $100 once more. Okay, so we want to keep our eye on this, but so far oil has been pretty much following our path, our general main path, since really most of last year and the beginning of this year. So we'll keep our eye on oil. I can't help but be bullish on it, especially after what we've been seeing. Next is gold. So let's take a quick look at gold and silver. So gold came into the 1800 zone, to my circled zone here, bounced off really hard. Now we may actually see this come back on down here towards about 1816 and then try and hold, because we might try and see if we can build out like a hidden bullish divergence play here, potentially, if it can hold. However, the dollar gets really strong really quickly, then you'll see this come back into this level, probably break through, pursed up a little bit higher, and then break down again, down towards these lower fair value gap levels here. And if we do come down towards these fair value gaps, it's still bullish overall until this low down here gets taken out. And as you can see, that is pretty far away. So the probabilities are much higher that we come into these fair value gaps down here and just create a higher low structure for then an eventual continuation to the upside. So I am very, very bullish on gold, but we do want to see a significant pullback, as this rally here was absolutely monstrous. So you have to respect what's happened on the chart, but a pullback here would make sense after such a powerful move to the upside. Okay, so gold, very bullish, but I am looking at more downside potentially. If we do break up higher from here after maybe a low consolidation over a couple days this week, again, this is going to be the first target here, and this is likely where you're going to see price slow down once more, taking out these highs, trading into this bearish daily fair value gap, and then turning over, and again, you're going to be looking for a higher low from this low to form. Okay, and then lead to continuation to the upside. This is the least probable path at the moment. It's more probable that we pull back further back towards 1800 and sub 1800. Next is silver. So silver, again, been playing out pretty perfectly for the most part. Came into this major level here, swept under these lows, and tapped just above this bullish daily fair value gap. I'm looking for it to come up potentially a little bit higher. This might have been enough. Okay, this might have been enough of a little bounce up, and then we may just pull back even further. It just depends on what gold does and how strong the dollar gets. But if we do have slight strength in gold and silver, look for another move back towards probably around 2150, and then it to kind of curl down and come back into this daily bullish fair value gap, and really testing this ascending trend line, which is likely going to break over a period of time. It's more likely to break rather than hold once visited. Okay, if we do break up, it's this path you're seeing here. That's the more likely path if we are going to break up towards the upside. But the most likely path is a slight rise and then break down towards this level, and then probably just trade around this level and build out a bearish structure to break down further and really grab the liquidity that has been pooling in this zone for quite some time. All right, next is Bitcoin. So let's take a quick look at Bitcoin, see what's going on with it. Actually, I might do a different Bitcoin chart. Yeah, you know what, let's do a different Bitcoin chart for now. I'm gonna continue to build out this one here, but I had updated another one first. Here it is. So we're gonna look at this one quickly. So this Bitcoin chart should give us a better idea of what we're seeing for you who's watching. So right now we're slightly just trading at the low end of this daily bearish fair value gap. Now I am seeing the possibility of us coming back up towards here and potentially filling this completely out and coming up even all the way up towards 24,000 again. Okay, so I do see this definitely being a possibility where we come up back towards this level here at 24,000, or we just come in to fill the daily bearish fair value gap around the 23,100 zone. Okay, because what I'm potentially seeing is a breakdown further going down towards the daily sell side liquidity here and going towards this daily sell side liquidity here and back into the general monthly bullish monthly fair value gap, coming back towards 21,300 to 20,000 and potentially even 19,500. So coming back towards this general zone here. Okay, so I'm looking for it to come back towards this general zone here, and once we're here, we have to be on alert for a higher low to start getting built from these lows down here. Okay, so if we can actually create a base somewhere in this bullish monthly fair value gap, it's going to get really bullish, and you're going to want to start building out a long position. So that is currently our plan after we closed our long in the Lemon Garden from 18,375 all the way up towards pretty much the highs over here, 23,000 and change, 24,000. We're totally out of the Bitcoin trade now, and we're enjoying the profits we made off of it. Now I'm looking to build out the long again if we should have a significant pullback back towards this level here. Now, if we do break up higher towards 24,000, what we may end up seeing if we have continuation beyond 24,000, we're looking at a potential rising channel, which in my opinion is the least likely path at the moment. Okay, the reason why is because as you can see, as you've seen price kind of been trading up, it's not had much luck actually having any major continuation to the upside. Okay, I'll show you that in 1 second once I redo that channel. I accidentally misclicked. So from this low here, I did it again. This low here to this high, I will fix this in 1 second. Right here, this low. Okay, perfect. Okay, from this low to this high right here, you're seeing a potential channel structure forming. Now, a rising channel after an impulsive move like this is bearish. Okay, it has a bearish bias. So what you'll see is something like this, where you have 3 drives to the upside, taking out these highs here, and then failing and then breaking this channel bearish. That's the most likely path if this is the structure that's forming. What I'm potentially seeing, and this is why I'm saying it's a good shot, we do see us come back towards the top side of this daily bearish fair value gap, or potentially even this I would say important zone on the daily, where you're having these wicks kind of meet. You may be getting a head and shoulder structure forming here, okay, and then having a breakdown towards these levels. Okay, so you're having some rising wedge structure, rising channel structure, or head and shoulder structure forming for a continued breakdown back towards these bullish levels to grab the liquidity, so we can get the fuel to actually continue higher. As you can see, if you take a close look, we had that impulsive rally, a wonderful rally from here, right? And once we came into this level up here after the small consolidation here, we pulled back, try to consolidate here, and impulsively try to push out beyond this consolidation here, and we slightly got above, but you can tell we kind of expended all of our fuel very quickly, because all the fuel that we amassed from this consolidation down here, right here, was not much, right? We didn't spend much time down here, so this was everything we had, and it wasn't enough to really get us through this consolidation decisively. So quickly we failed up here and broke back down, back under this consolidation, and now we're threatening this consolidation to take the sell side liquidity that's pulled under here. So we want to see this liquidity get taken out, because if this does get taken out, it gives us more fuel to then find more strength to go up. So we don't want to see another drive up, because what will happen is it's likely that we'll fail near these highs, and then you'll probably pull back down harder and go even lower towards the $19,000 zone. So we want to make sure that we don't get too overheated, and that we grab the liquidity as we need it to then take that next leg up. Right? So if you're looking for upside, that's what you want. Now, if you're a bear, this is not a bad place to be short, or at least to build out a short. You do want to build out a short here. I will say, you might want to use this level as your invalidation. Again, be careful if we are in that 3 drive structure. These levels can get taken out and then failed on. All right. But if you're looking for a target as a bear, obviously you have the sell side liquidity levels down here. And if you're looking for potentially on the monthly that this just failed, that this is not a bullish rally, a bearish bear market rally occurring, and you're looking for an actual failure to break under these lows, the level you want to watch is 18,379. See, because this is the high of the December monthly candle. And it's very important that the monthly candle that closes, that comes down towards these levels, if that should happen, does not take out these lows, that level here, okay? It cannot close the monthly candle below that level, I should say, okay? It cannot close that monthly candle. So if we ever come back down towards this level, and it's this month, April, May, June, whatever, any monthly candle that closes under this level will imply continuation down towards the 15s. All right, so this level must be defended if you're bullish. If you're bearish, that level must be destroyed. Understood? Okay, so as of right now, the Lemon Garden on Bitcoin is short-term bearish, but I am mid-term bullish, midterm bullish. So I am looking for it to pull back, but the pullback, in my opinion, as of right now, is bullish, and I will be looking to play it. Obviously, if you're a part of the swing trade service, you will get my alerts in real time as I potentially open up trades, or and also if you're a premium member in general, you'll just get my exclusive thoughts that you'll get it in real time as well. So be on the lookout for it if you're going to follow me into these positions. But overall, it's been an absolute great start to the year. If you haven't checked it out, make sure to check out the Lemon Garden annual report card video I just put out yesterday. It's a video that goes over our performance for all of 2022. So if you are interested in my Discord, you're interested in my services, watch that video. It'll give you a good overview of what we do, how we performed last year, and maybe it'll pique your interest, or it'll keep you away if you want to stay away. All right, everyone. That is it for this recap. I hope you had a good time listening and you got something out of it. And I'm hoping you're having a great day. And remember, if you ever need to talk to me, you ever need to get in contact with me, the Discord's the easiest way. And obviously, you can always leave a comment on the YouTube video. I'll do my best to respond to every comment I see. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.